Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm here with another video. And this time, this video corresponds to a animal healthcare provider, a company that is around 2,000, 2,500 crore market cap, and that can become big over the next 3, 4 years. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position or any share that I talk about should there with your own due diligence and research, and I'm not in favor or against any company that I talk about. I'm not in favor or against any company that I'm talking about. Whatever discussions I have with respect to any company is on the basis of my experience in the market over the last 11, 12 years, and whatever decisions with respect to investments or trading you take, kindly to take that on note that it is laden with market risk, and do consult your financial advisor before doing that. Now, before I talk about this company, here's a small request. Kindly support me on Patreon and YouTube. Once you do that, it will help me grow the channel. Help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts on domestic and global economies, on number of stocks, short-term, long-term calls. Plus, I am also bringing in weekly, you can say, calls from a long-term basis. Stocks that are looking very attractive, that is only for the Patreon members out there. Plus, the watch list gets updated every month, and whatever changes I make to my portfolio, I update there. So you can become a member on WhatsApp, YouTube, or Patreon. You can check that out. Now, in order to discuss about this company, let me take you to the screen of website. The company in question is Hester Biosciences. Now, this is a company I did cover 3, 4 years back as well, and before pandemic as well in 2018. And it has gone up from there. So it was around 600, 700 crore market cap at that point of time, say 5, 6 years back. It has gone to around 2,200 crore market cap, but it is still down somewhere around 25% from the top, although the numbers are much better. So let's just understand about the company. So Hester Biosciences is one of the leading animal healthcare companies and the second largest poultry vaccine manufacturer in India, and it is one of the largest in the space of you can say animal care, etc. So if you dive more into detail, then then the company has had a tremendous performance. So in terms of market share, it is the world's largest manufacturer and supplier of PPR vaccines, having 75% of the world's market. It has a 70% market share in goat pox vaccine in India. It is also the second largest poultry vaccine manufacturer with 35%, you can say, market share. Poultry healthcare corresponds to around 48% of their business. Other animal healthcare corresponds to around 43% of their business, which has gone up from 27%. And the company is offering six vaccines for livestock, covering diseases like pest disc, petis, and many other in there. Uh, in terms of pet care and other products or value added products, they have 9% of the market share, or 9% of the business comes from there. So that is the split. In terms of geographies that they cover, the company exports products to Asia, Africa, Europe, and South America, maintaining a presence in 35 plus countries, and basically focusing on India, Nepal, and Africa. So domestic business is around 86%, but they have increased their exports from around 6, 7% about 5, 6 years back to doubling that to around 14% today. So they are having footprints globally as well, as I mentioned, around 30, 35 countries. Now, the numbers are very interesting, although the stock has been in, you can say, in a range. So its stock went to around 3,200 in July this year, but then fell, and now is trading around 2,600, 2,700 levels. Now, if you look at the numbers, the growth has been pretty good. So in the September quarter, what they did was around 84 crores of sales on a consolidated basis, with operating profit of around 19 crores and margins of around 23%. versus margins of around 19% last year. So if you look here, the margins were around 19%, 18.8%, and the margins increased to 22.9% this year. So very good expansion of margins in terms of operating profit from around 13 crores, it's gone to 19 crores. So that's a good 40-45% jump. And in terms of net profit as well, we have, so let's just take out the net profit part, because in September quarter they paid around 40% tax. This year they have paid 29-30%, but profit before tax was around 6.8 crores last year, which has now grown to 11.9 crores. So big jump. There's no question about it. And this is a jump of around 75% or so, 75-80% growth in profitability. And the EPS has shown through 9.6 rupees EPS versus 4.8. So things are looking much better for the company, although on a PE basis it's still around 90-95 times, trading at 90-95 times. But on an overall basis, on a 5-year basis, the average PE is around 54. So any further dips in the stock uh, is quite good in terms of accumulation. And plus, if you have a big quarter, say in December, if their December quarter numbers are similar to what they have done in September, then we are looking at a situation where the valuations will become cheaper. So if they probably have a similar number, say 9 rupees EPS in December, then overall EPS will grow to somewhere around 18.65 will become somewhere around 32.5 rupees and EPS yearly. And if I take the price of around 2200, then your even better. So it's around 69. So the PE will reduce to 69. So I believe that probably you can look at one more quarter results if they are good. But one can start accumulating again a small cap company. So be extremely careful. But this has the potential to go big over a period of time, because if the numbers keep on improving, if you look at yearly numbers here, 178 crores, 183 crores, 214, 235, 266, it kept on improving in terms of sales figures kept on improving, and margins were in excess of 35-38% earlier, which dipped, and that triggered a sell off into the stock from around 2021. But now margins are coming back. So what we are seeing is that margins are back to 22-23%. This year they could do northwards of 20%, whereas last 2 years they have done 19 and 18%. So if margins expand over the next 3-4 years as things normalize globally, I think the stock could do extremely well. In terms of shareholding pattern, promoters hold around 54%. FIIs currently hold 0.6%, but this is an improvement of sorts from 0.4% or so 1 year back. And public shareholding is around 45-46%, which is in my opinion set to go lower if FIs really start getting into the stock. In that 45.6%, there is at least, you can say, 11-12% of large public shareholders that are there. So yes, I there is a, you can say, point that public shareholding is larger here, and FII and DIA holding is virtually nothing. But once numbers start kicking in even better, then we could see large investors getting in, or you can say foreign investors getting into the stock. Very good management, decent management that we are looking at. So this is a stock that could be looked at, could be analyzed from a 3 to 4 years perspective. So this was a video on Hista Biosciences. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. And kindly do support me on Patreon or on YouTube. I have started the YouTube membership as well. Thanks a lot for watching.